All right, segment number 4, niche products at Cal State LAFCU. This is to me a great section. It's not as much for new home buyers, but we have products literally that nobody else has. And let's go ahead and start into the next slide. All right, so we have mortgages for the self-employed. We have mortgages 6 months after a significant financial event, 10% down purchase up to $2 million. Outside of the box deals that just make sense, and Cal State LA FCU's 80-10-10. So let's go ahead and go to the first one, mortgages for the self-employed. All right, so mortgages for the self-employed. Self-employed people, in most cases, they write off everything they possibly can. But what happens by writing off as much as you can and what's allowable, it doesn't show that you make as much. And so what happens is many self-employed people are not able to afford or qualify for a loan. And that's when stated loans were really big. A lot of self-employed people were able to take advantage of those loans back before 2008 when that ended. Well, we have figured out a way to go ahead and qualify them, and we qualify them using their business and personal bank statements. We use the deposits as their income to show, remember that other acronym, ability to repay. All right, so we utilize those, and so they're able to get loans. So no tax returns required, no W-2s or P&Ls required, and the rates are still starting in the low threes. This is something where the self-employed were really, I know that self-employed probably in the average make more than your average worker, and so probably not crying too much of a river for them, but you know what? They were an underserved community. They weren't able to get loans. They were stuck in whatever loans they were in and weren't able to access their equity. And now they can. Let's go to the next slide. 6 months out of a significant financial event. Significant financial event are BKs, short sales, foreclosures. Now you might think that, if somebody was to have one of those things, wow, that's not a real good bet. But the one thing that's so great about credit unions is they use common sense. They look at the person, they look at the scenario, they look at why did it happen? Was the person irresponsible, or was the person unlucky, or did the person have a significant financial or life event that caused it? Let me give you some examples. First off, let me tell you, conventional lending and besides credit unions, getting a loan after a BK short seller foreclosure, you have to wait years. Once you've had something like that happen, doesn't matter why or how, they just will not do a loan for you. And so places like a credit union, like Cal State LAFCU, they will consider these, as well as other credit unions that we also have access to their programs as well. So in this right here, so a bankruptcy, let's go ahead and say somebody got divorced and they had to go BK because their spouse that they divorced ran up $100,000 worth of debt. That can happen, and also bankruptcy, you can only get a bankruptcy every 7 years, and we could put somebody in a 5/1 adjustable rate mortgage that's fixed for 5 years, and they have to get it, they'd want to get another loan after 5 years. Well, that still protects the lender's position. A short sell, we saw a lot of people get caught in prior to 2008. You had so many people were buying investment properties, and they thought that this ride was never going to end, that values could never come down. Well, they got caught, and they had to short sell a property, and it was an investment property, or they had a timeshare, and they had to short sell a timeshare, or they got a foreclosure on a timeshare. These kind of things happen, or a foreclosure, let's go ahead and say a spouse died or somebody got really sick and they had to let a house go. And a lot of times foreclosures and short sales, a lot of times they're not their primary residence. A lot of times they're investment properties or their timeshares or things that they made a bad investment or something like that. So to be able to help people out and give them a second chance and consider them, even though they had a financial event happen, is just kudos to the credit union community. Next. Jumbos, 10% down purchase. Now, this is something that it hasn't been around long, but it is an absolute great program, 10% down. So you could get a loan, for up to $2 million with only 10% down. Oh my gosh. That means only $200,000 skin in the game for a $2 million loan. That is not something that you see every day. And also for a 15-year loan, it's starting in the mid twos. It's just an unbelievable loan. From the attendees that we have, I don't know that a whole bunch of people would be able to utilize it, but there are some that can. And if you've shopped for this kind of loan, this is absolutely a diamond out there. Let's go to the next one. All right, out of the box mortgages. Okay, so what do I mean by out of the box? Fannie Mae and Freddie Mac and FHA and VA, they have a box that your mortgage has to fit into. And if it doesn't fit into that box, you can't get a mortgage. It's cut and dry, plain and simple. You can't do it. And there's a lot of different things that are out, a lot of different scenarios that are out there that if you can just tweak it a little bit or use common sense, you can still get this person qualified. So let's go ahead and take a look. The first piece is on a cash out loan. You can get cash out in the first year utilizing current market value. Example, if somebody was to buy a house under market, they went out and bought it all cash. And they bought it because they bought it all cash and they were at the right place at the right time, they got it $200,000 under market. Or if you were to get a house and fix it up and put $100,000 in and you wanted to refinance to get some of your money out. In conventional guidelines, you have to wait a year before you can use a new value. Not so with credit unions. As long as it appraises at a value, you can use that current value. You don't have to wait a year. It's awesome. It's just something that they're using their common sense. They're using their head to be able to qualify people and helping out more people. Qualifying with a non-occupying co-borrower. Another way, conventional doesn't like you using a non-occupying co-borrower, but in the credit union community, it's something that can be done. And if it makes sense. Using compensating factors to expand guidelines. So what I mean by that is let's go ahead and say somebody had a 50% debt to income ratio. Remember that acronym we talked about, debt to income ratio. So that means that your debt is a higher ratio than they want it to be to your gross monthly income. All right. So let's go ahead and say that the person had $250,000 in an IRA or in a 401k. That's a compensating factor. It's like, wow, well, the person might not make just as much as we want them to make, but boy, they have so much reserves. They've been in their job for 25 years. They have an 800 credit score. There's compensating factors where we might be able to ease it just a little bit to a 52%, and still qualify that person. It's using common sense. Or their loan to value, they have 50% of equity in the property. It's pretty hard to go wrong with investing in something like that. So it's those type of compensating factors that really help to approve more loans. And really when it comes down to it, common sense underwriting doesn't make sense. Doesn't make sense to do a loan with this person. Okay, next. All right, the Cal State LA FCU, the 80-10-10. So 80% first, 10% second, and a 10% down payment. Only 10% down payment is a low down payment, no mortgage insurance, no upfront funding fee like government loans. This is a niche product. This is not something you just go down the street and find. This is something unique to Cal State LA Federal Credit Union. And you saw the payment. The payment was down close to what it was for 20% down. I would say of all the products, and I'm not just trying to peddle, Cal State LA's market here. It is absolutely a dynamite product with a really low payment for only 10% down. Let's go next.